So welcome everybody, and very pleased to be chairing today the opening of the keynote panel, the Insurance Leaders Perspective. So let me welcome to the stage, first of all, Raghav Jaggi, the Global Co-Lead P&C Insurance for EXL. As Richard said, EXL is the leading analytics and operations management company globally. Secondly, let me invite, you're going to confuse me by sitting there, Raghav. Let me invite Praveena Ladva. Praveena is the Chief Technology and Operations Officer for Swiss Re Life Capital. Next, Stephanie Smith, the Chief Operating Officer for Allianz UK. And finally, Christina Nestares, the CEO for UK Insurance at Admiral Group. So I'm very excited to chair this panel today, and I'm going to give you a little bit of background on the InsurTech Gateway so you understand my interest particularly. We are an incubator and an investor in InsurTech businesses. We're actually FinTech Global's 2019 leading InsurTech investor. We've invested in 14 companies over the last 30 months in the InsurTech space, both incubating and investing in them. And we collaborate with insurers, reinsurers, and tech companies to help build and test products in market for the InsurTech's benefit, for our partners' benefit, be they insurers, reinsurers, or technology companies, and ultimately for our investors' benefit too. So enough said about that. Let's crack on with the questions of the day. The first question is, what issues are the top of the agenda for the CEO and CEO of successful insurance firms? Perhaps I could start with Raghav, who has moved one seat to the left. Yeah, would you like to open the questions?
Right. So Richard, the number of things that in our discussions with the CEOs and CEOs we come across, ranging from climate change to a number of other topics. But the three that come the most often, the first one being digital transformation. A number of the legacy insurance companies today are struggling with the systems and the plumbing and the electric that's already in place. How to use data, how to leverage data, how to kind of process that data continues to be a significant struggle. And in the world where with a couple of clicks you can have what you want with Amazon and Uber, insurance companies and the CEOs really want to become digital first for their customers. So that's the first thing that we see and we come across a lot. The second bit is human intellectual capital. Talent and the scarcity of talent, especially given that we're not the cool industry as compared to the Silicon Valley startups or the tech or the consulting world. Attracting, retailing the talent is a significant challenge that we hear all the time. And the third bit that is increasingly becoming more and more of a concern and a burden is privacy, cyber, and ethical AI. And I can elaborate more on that point. The tolerance for any misstep as far as information is concerned is next to none today. From a customer's point of view, how safe my data is, and from a regulator point of view, I think the pendulum is shifted significantly, and it's kind of over-regulation that is impacting a significant amount of growth. So that continues to be a significant challenge. But I'll probably pass it on to my colleagues, as they are the CEOs and CEOs of a number of insurance companies. So, Christina.
Morning, everybody. Thank you for the invite to be here. I will fully agree with you. I mean, everything that you mentioned, it's very high on the agenda. I'll say also the usual suspects, things like claims inflation, pricing, and possibly more than ever, regulatory change. We had a lot of changes last year, but we're also expecting a lot of changes this year. And they go beyond the traditional aspects. They go into operational resilience, cyber, and many other things around it. But I will say that more than in the past, the agendas are full of topics around transformation. All of us are in a journey. We're in different stages, but I'm sure we're all trying to have data-first, data-driven companies and to have a technology that is flexible enough to adapt to customer needs. But I will add one more thing. I think we're also very focused on the future. I believe there is going to be changes in distribution, changes in customer needs. Even the product itself, it's going to change. And how we adapt ourselves to those challenges is quite important too.
Pravina, it strikes me that the first two members of the panel talk a lot about technology and technology challenges. Insurance companies aren't really technology companies, but it seems to be one of the biggest challenges we're faced with. Would you agree with that?
I think it is, but I think we almost need to take a step back and say why. Why is I think majority of the people in the room would probably agree technology is easy. You either do it or you don't. It's very black and white. But it's you need to take a step back and go, why are we driving that transformation? Why are some of these challenges presenting themselves? And I think it's because consumer behavior is changing. So from a consumer perspective, they interact in their daily lives very digitally in a different way, and they want that same service, same responsiveness from the insurers. So our challenge as insurers becomes, how do we move fast enough and give them the same experience and the same engagement that they get in every other aspects of their life? And therefore, that's where technology becomes important, because technology then becomes the enabler to deliver that service that the consumers expect. And then if you go one step deeper, the technology challenges, there is such a vast array of what you can do, but it's the ability to deliver it fast, be able to plug it in and take it out if it doesn't work. And it's changing the DNA of the industry around pace, which hasn't happened to date, but I do believe we're in the brink of that change.
I mean, I echo everything that my colleagues have said already here. The only thing I'd add, I guess, just to bring a bit more flavour to that, if you couple the operational resilience challenge and the focus of the regulator on protecting our customers and the service that they get, with a desire to adopt new technology, drive digital solutions, it puts us in a bit of a conundrum. How do you go at pace? How do you experiment? How do you do new stuff while at the same time be able to demonstrate you've taken due care and resilient decisions around the pace of change? It's a real conundrum for us, I think, at the moment.
And what is specific to Allianz, who amongst the panel members probably has the biggest book of legacy systems and companies here, what are you doing to enable that transformation internally? And I mean, are you working with external companies? You working on it internally? How do you go about manifesting that change?
No, very good. On a global scale, I'm sure many of you will be aware that we have a company called Allianz X, which has been set up explicitly to explore in a safer environment investment in new startups, and we have over €1 billion under investment. And I think in the last 4 or 5 years, as long as we've been set up, we've invested in 15 sort of significant enterprises. So we are recognising that we need to invest, we need to connect with people who are good at this sort of stuff. We can't do it on our own. While we've been around for many, many years, I think to Christina's point, if we don't evolve and change and think about the changing risk environment that we operate in and the new technologies and capabilities that are out there, we'll get left behind. So it's about partnership, and it is about investment, and it's about keeping your eyes and your ears open on the market.
Okay, thank you. So the next question really builds on the first one, I guess, is are traditional insurers digitizing quickly enough? Perhaps, Christina, you'd like to start with this?
When you compare insurance and how they are distributed today and how we operate around claims versus 10 years ago and versus competitors, I'll say definitely not. we are not where we should be, and I think we're not even where our customer want us to be. If any of you has bought car insurance or home insurance in the past year, I think despite all the effort by price comparison and all the effort that we put as insurers, it's quite a painful process. Also, I believe sometimes there is a lack of trust, and there is just a very long process to get through the product. And that's just sales stage, which tends to be the most advanced. Imagine claims, still a lot of people need to call the insurer, wait for information. Overall, we have a long way to improve. And I think most of us are really focused on trying to do what we have always done online. But I don't believe we're yet seeing very innovation that is taking advantage of what digital can offer to us. So I'm slightly negative on our own industry, not a credit to my company, but just in general, it's a reflection that we need to do so much better.
So arguably aggregators, of which Admiral owns a large one, was an innovation, I guess, I don't know, 15 or 20 years ago, and is now very much a legacy platform, I would argue, which drives a lot of dissatisfaction amongst insurers, particularly. Is that a fair criticism?
I think you went too far. No, I really believe price comparison has made the process so much better. I mean, if you just want to compare a price before, you just have to go into every single company. You have to call them or do the quote, and now you can only do it once. Let's just accept that it's been a big, massive change, and it improves so much how we do things. It's just that we can do better. Even price comparison is already reinventing itself. They're launching new models of interacting with customers and very different customer journeys. So I wouldn't call them legacy yet.
Okay.
Could I just add, you're quite right. I think aggregators have been revolutionary in relation to giving customers the power to buy the right priced product. Frustration for me, and I come from the airline industry, where it's a very similar environment, is it's not just about the price you pay, but it's the service that you receive. And ultimately, that's what differentiates a good and a bad insurer. When things go wrong, what service do you get? And I think the frustration I have, and this is not an Allianz shared view, but my personal view, on aggregation sites, is that it drives people to the cheapest product, and therefore it makes it very tough as an insurer to segregate on your service and make sure that people are actually buying the right product for what they need. And I think that makes it tough.
I agree. I mean, I think insurers have tended to compete solely on price. As you say, it's difficult to distinguish through a platform which is really just ranking people according to price. Pravina, do you have a particular perspective on this?
Yes, so I think if you go back to when the aggregator model came out, it was an answer. I go back to the consumer need around efficiency and how can I quickly do something instead of making 20 phone calls. I think what we're seeing today in digital disruption is an emergence of new models, and how do we embrace those new models? So one way we've done it within Swiss Re and Life Capital is really create a digital platform that is available to many partners, and those partners can be a brand. It could be one of the big primary insurers, so that they don't have to invest in legacy and can almost bypass that legacy to take a platform, plug it in, but provide that insurance to the consumer when they need it. So it's about an embedded purchase. So when I'm buying a car, guess what? I need insurance. At a life moment, I might need insurance. So it's combining the digital journey with the moment of truth for the consumer and addressing a consumer need, but doing it in a way that is flexible and balances price with service. I think those are the critical factors. And if you wrap all of that up, again, it's about speed. Because I think without speed and innovative ways of working, delivering any kind of business model will be a challenge.
So you deliver a lot of your product through partner businesses.
Correct.
And that obviously, as you say, gives you that moment of intervention when people may want to buy the product and perhaps therefore are equally less driven by price. Arguably, they don't need to come back and get 20 quotes every year if they're satisfied with the service. Do you think that is a model that will grow in future?
I think it will, because lots of people want to provide this service for their consumers, but know that they've tried to do it themselves or don't do it through partnership, then it's going to take too long, so they will miss the moment. So I think what we see is this kind of model expanding globally, because it's almost around, and what you find in the industry today, there's lots of fight of who is the customer and who owns the customer. Well, with our business model, we're like the customer belongs to the brand or the partner we work with, and our customer is that distribution partner. What we're doing is enabling that partner in the middle to expand their reach to their consumer base. So really, we're interested in helping them expand their business, and they're interested in helping their consumer. So I think that will grow. On top of that, if you take data and the richness of the data and wherever it's available from, that really allows us to do what we're good at, which is manage risk knowledge, versus trying to be a retailer, which may happen in years to come, but I don't think as an industry we're there yet.
So, Raghav, insurers are sitting on this huge asset of data that they've accumulated over years, but have been are particularly ineffective, I would argue, at mining it currently. How do you help them mine that data and make most of it for their customers in future?
So, Richard, when we come in, we look at data in three parts. Number one is the intake of data. How is data coming in? How do we digitize that data? Number two is storage of that data, right? The creation of the lakes. So is the data stored in the correct format? So when the organization wants to dip in and use it, can use it. And third is the availability of data, which is when I need to use that data, can I visualize it in a simplest form rather than heavy coding and big bang things? So we come in and support companies in all three aspects of data. And there's a lot of focus on analytics, but really, I mean, if that data quality and the data intake is not good, no matter who you use to create those models will only be as good as the data that is fed into that. So we actually are supporting a number of large global players, probably 7 out of the top 10, with their effort around both the data aspect as well as the analytics aspect.
And sorry, just to answer that, the question, which is, are traditional insurers digitizing quickly enough? I mean, I suspect I know your answer.
No, so the answer is actually a mixed bag. Now, this is quickly enough is a very relative term. Quickly enough compared to what? And the answer changes. However, we do see a number of insurers that are using very innovative ways. So, for example, Allianz having Allianz X or AIG having Blackboard. The issue is really culture and mindset, right? In this legacy 100-plus-year-old organization, there is a set way of doing things. And to change or to move that mountain is obviously a large and a difficult task. So Liberty Mutual setting up Liberty Ventures or a Blackboard within an AIG, it kind of takes into account the best of both worlds. So you actually can go out and bring in the latest and the greatest without relying on the mothership as far as the legacy systems are concerned, but you still are not a millennial with a backpack and says, I am now the InsurTech guy and I understand. You've got the heritage and knowledge of what underwriting and risk selection really means. So it's kind of a mixed bag, company to company, but overall the aspiration from the board and the CEO versus the reality, there is a big gap, and that's how I would like to put it in the most politically correct way.
Thank you. Christina.
Richard, I found your, when you mentioned that insurance are actually quite slow in terms of data, I'm not sure that's correct. I think as an industry, data has been at our core. We have been focusing on this for many, many years. It's true that now the opportunities, the amount of data, and the analytical skills have improved massively, and we all have a way to go. But I would say that data, actually, we have been pretty good at it. And I want to mention a couple of examples. At Admiral, for example, you could get a household insurance in 4 questions, and it takes you less than a minute. We even tested no questions, just your address, but people were a bit skeptical, so we realized it was better to ask for than just your address. But there are ways of using data happening today that really make life for customers so much better. Or, for example, telematics. It's another area that is quite relevant, at least for car insurance. It's a massive use of data, and it's extremely useful for the customer. It's not just about pricing, but we can help our customers so much better at claim stage, and we can offer many more services. So I will like to disagree with you again, Richard.
No, that's fine. I appreciate that. I see that when we ask the question, are we digitizing quick enough, is because who is the competition? So is the competition really our existing peers of insurers, or is the competition the likely competition of the future, right? Which could be technology companies, big, huge consumer brands, who are actually much better at creating and digesting live real-time data, perhaps today. But the asset that insurers have that those technology companies don't have is the legacy data in your repositories. Effectively, you've got all that saved up data which they can't accumulate for many years. So I get the telematics, but that's real-time today data. But it doesn't give you the historical data on the reality that an insurance claims operative is a particularly poor risk, for instance, for a car insurance or something. So that sort of embedded data, which is hiding within a lot of the insurers' data. Okay. So the next question is, in what ways can collaboration with InsurTechs be furthered for the benefit of the customer? Would you like to start with that?
Maybe if I could start with that one. So, it actually goes on to what you were saying before. So where is the competition going to come from, and where is the challenge going to come from? I think it will be someone or something we don't know about today. But I think it's something that's out there in the future, and it'll probably come from the place we least expect it. But how we can win in this market, I think it's a combination of two things. I think it's a partnership with the InsurTechs that solve a real consumer or a business-driven challenge with the insights and the knowledge and the data of a big insurer. So I think it's that secret magic of those three things coming together, which is going to sort of unleash that power. I think if I then take those three factors, it is working in the right way together that's going to be critical. Because often when you find in these scenarios, the InsurTechs are really good in their new ways of working, great technology and with data, and their way of working is different to some of our bigger insurers. So the danger there is they get swamped by governance and control and operational risk and legal, and I can carry on. But what we need to do is bring those as enablers to the business so they flourish. And the other way around, the InsurTechs can learn a lot from the big insurers around the data and the management of risk and the heart of the insurance business to really bring their propositions to market. So I really think it's going to be a partnership. And we have a few examples in our business where we've done that today, where we have partnered with startups from whether it's Silicon Valley or Tel Aviv, and we've taken their technology, worked with them very closely, done proof of concept, and taken those ideas to production. There's one which, on one of our online websites, increased our conversion rate by 50%, just by what they could do. And there's many examples, but if I reflect on why that worked, is because both businesses were accepting of each other and worked in a very different way than they would normally. And we did it in-house. We didn't create a separate incubator to do it, because our worry is that, and we know this is a strategy in the market, is sometimes when we create different incubators, the mothership tends to reject them and saying, oh, you're very special over there, you can do that, we can't. And to really make a change, the company as a whole needs to change. So I think that's...
So you were able to recycle those insights from those partnerships back into the mothership.
Yeah.
The only thing I was going to add to that, I think, was I was reading in the paper yesterday, I'm sure many of you were as well, around Pocket. It's a banking app company that is clearly very innovative, done some fantastic new thinking, but have got to a point where they've got a bit too big and potentially now need to sort of re-bolster their resilience and their operational processes to really get the scale and the size that they need. And I think that's that again, back to the point I said before about the balance between innovation, pace, the creativity to try new things, but at the same time having a business that's fit and that's stable and that can work in the modern world. And I think just to build on something about data as well, which I think is fascinating, it's really careful that we use data carefully, and the data ethics topic I think is becoming bigger and bigger. So making sure we don't reinforce our assumptions around data and the rules around data just to create this sort of uninsured underclass of people who just get sort of singled out because they don't hit all the right noughts and ones when the algorithms run. So I think it's really important we focus on data ethics, and I think this partnership piece is really critical for both parties going forward.
And does Allianz work directly with InsurTechs?
We do, but we do it through Allianz X. We were just talking about some of the challenges we have being such a big global business, a massive global business. We tend to pick very carefully those that we partner with.
I mean, it's difficult to imagine an InsurTech really moving the dial for Allianz in the next lifetime.
Well, we recognise that the whole world of insurance is changing significantly. And if you look at how it's distributed across Europe, it's changing almost with a blink of an eye all the time. So if we don't change the way we work, we won't be here in the future. So we have to do it.
Okay. Christina?
Admiral works very closely with InsurTechs. There is so much that we have to learn. I feel that a lot of large insurance businesses are faced with the innovator's dilemma. We have been very successful doing the same things over and over again. We have done a lot of improvements, but really our model stays the same. And sometimes it's very hard for us to really reinvent ourselves, to really understand what the customer fully needs and be able to serve them and change our system and our company. So it's becoming more important than ever to stay close to InsurTech, to learn from them and understand the models. In Admiral, for example, we acquired a company to do short-term insurance, and it's something that we have been offering now for a couple of years to make our products more flexible. So you can insure from 1 hour to basically 1 month and do it in a very flexible and quick way. However, I also am slightly uncertain about the future of InsurTech. You were talking about who are going to be the winners in the next decade. I am much more concerned about consumer companies. Amazon, for example, are they going to enter insurance? Are they going to become a price comparison or maybe an insurer themselves? That, to me, is a very big threat. InsurTech, I'm sure there will be some winners, but truly I see it most as an area where we can learn from, where we can partner, but not necessarily the biggest threat for the future.
Okay. Do you have an investment fund and or an incubator or anything? How are you going about interacting with InsurTechs?
We do. We have a separate part of the business that deals with that, but we keep a very relationship at all levels of the business. So, for example, when we meet with InsurTech companies that deal with claims, we like to take our own claims people. When we talk about companies that deal with data, that's the people that we take with, because even though we have a separate arm and they look at acquisitions or they look at diversification, at least I am much more focused that the core of the business also learns from so much innovation going on.
Okay, thank you. Sorry, I should have mentioned earlier, if anybody's got any questions, they can post them through the app, and I'll put them to the panel, or please do put your hand up and we can pass a mic to you in the audience if you've got any questions. So. Okay, let's move to the next question, which is how will the role of insurers evolve over the next 10 years? I think, I guess as CEOs, COOs of these businesses, this is what you're paid for, right? Predicting where you should be. How you should be evolving to meet those changes.
I think the role of insurance, which is about helping people take risks and look to the future and be confident, will not change. I think there's always going to be a price for sharing and spreading risk and helping people do new things. Insurance has been around for hundreds of years, and I think it will continue to be around. But the threats and the risks are changing considerably. So whether you're looking at climate change or new innovations of AI, which enable you to do smarter stuff with your data, or you're looking at the Internet of Things, or you're looking at electric cars, autonomous vehicles, what we insure and the things we need to focus on and the tools we need to use is what has to change. And I think that's the whole point and the basis of these sorts of conferences, are why they're very exciting and important for us. Because if we don't keep pace with that technology and that changing need of the world and customers, then as an individual insurer, then you won't succeed. But insurance itself, I'm convinced, is a basic basic requirement for the world to spin.
Okay.
I guess just building on that, and a small anecdote, I listened to a futurologist recently, and the whole topic was, as AI becomes bigger and bigger and the world changes, what is going to disappear? And two jobs they said they will never disappear. One was a dentist, because you can't get the widget small enough to fix people's teeth. And the picture they showed, I'd agree. The second one was priests or people in the church, because people want that human interaction. So you'll think, well, what is that relevance to insurance? The relevance to insurance is, what are we doing? We're protecting. So the core need here is around protection. Whatever it is that you're going to protect will absolutely change. How you protect it will change, but that's what we do. And that's why I agree with you. I don't think insurance in its concept will go away, but how we do it, what we do with it, I think will always be there, because that basic human need is going to be there to protect, whether it's something you've bought and spend a bucket load of money on, or whether it's protecting a life of a loved one. So I think that's why I think that will still remain.
So I agree, but is the issue here that insurers traditionally are focused on the financial transaction of risk and have really neglected the sort of mitigation aspect and partnership with them? Yeah.
So, Richard, what at least we see across the board, and when I say across the board, across the US, Europe, as well as Asia Pacific now, is 10 years is a whole decade. And 10 years in today's parlance is about 50 years of what it used to be in the past. So what is fundamentally changing in 10 years? Explosion of data. I mean, there is going to be so much more data that is going to be available, that fundamentally how insurance companies use that data is significantly going to change. I think, Christina, you alluded to non-traditional players like Amazon, Walmart entering into this arena. And the third bit, which is going to be a significant shift, at least that's our prediction, is the traditional role of an insurer would fundamentally change to risk mitigation and risk prevention. I think that's the one thing that every insurance company is very, very proactively focusing on. Rather than being the taillights or after the event, how can they be, before the event or during the event, the true partner for the insured? So I think that is one significant shift in the next decade that we predict will kind of take place and is taking place, and insurers are getting up for it.
I will definitely agree with what has been said. I think a further change might be in distribution. I think we might become more removed from the end customers, and insurance might be sold as part of other products. So I'm always worrying that we're going to become almost like a white label at the end of the process and just basically capacity providers type of thing. So I will agree with everything. There is always going to be a need for risk sharing, but our role in it might fundamentally change and possibly reduce.
And I think the prevention piece, just again, going macro and micro, and again, Allianz, as I say, a very big global business and have the ability to do that. But one of the things that we've chosen to do is influence on a global stage investment decisions and say that, you know, we as a business will not invest, and we expect other big global investment firms to not invest in companies that are, you know, adding to the carbon problems. So I think I mean, that's really, really long term, but a really important signal to suggest we're not just here to make money. We are absolutely here to make a difference, keep people safe long term, short term, and I think prevention, you're spot on, is really important to mention.
So if we look at very sort of contemporary examples of risk prevention that are out there today, I mean, there's telematics in motor. There are IoT devices in the home, particularly for water damage. And these are devices that have been around for a few years now that people have been developing, but their prevalence in the insurance space is still very small, right? The adoption rate is tiny compared to the size of the market. Why is it that it has been so slow to be adopted? I mean, the flood IoT devices that prevent water damage in homes, 40% of claims, so something close to 40% of claims on homeowners are due to water damage. I mean, it's not beyond the wit of an insurer to find some way of amortizing the cost of that device over a few years. Yet, it seems that it is very slow to get it into the market. Is that because consumers are slow to adopt, or because insurers are not pushing it hard enough?
I think it's probably a bit of both. I think if you can make an emotional connection with your customer and talk about, excuse me, spending another 50 quid on a gadget that goes on your pipes to spot whether there's a flood or not, it will save you lost photographs that you can never replace, and you play an emotional position on that one, then you have a better chance of getting connection. But actually, if you're just talking about price, then it's a very hard thing for people to get their head around. So I think there's a little bit of that. If you look in some other areas as well, where we've got legislative requirements, so we have an engineering, insurance and inspection business, you know, you've got to have an engineering inspection to guarantee some level of safety in order to get an insurance product. So I think there's an expectation, there's a customer need, and there's being able to quantify and describe it in a way where the customer sees the real value of prevention. And I think we might start to see some change there. I mean, social media will help to draw a light on some of those needs. But I think it's a bit of both.
Yeah, no, I'd agree. I mean, if you look at, I mean, I'd add to your list, Richard, you know, there's wearables, there's facial recognition, to, you know, so you don't have to do underwriting. But I certainly think it's a combination of consumer trust and some of the early stages of technology and the predictability. Because ultimately, we have done some market testing globally around various markets, and sometimes people just don't believe it. They're like, if you're only going to ask me 2 questions, are you for real? So there is a degree of, you know, still a degree from consumers around, and market to market is different about how much data do you really want to give. If you ask too little or too less, are you trusted? Does the technology really work? And then on the business side, how do we make this an emotional connection? So I definitely think it's a bit of both.
It's interesting because I mean, just my observation would be that the life and health sector is probably ahead of the P&C sector in this, with the wearables and the health. Yet that is a far more sensitive area from a data privacy perspective than the P&C side. So it's interesting that if it can be done in the life and health, why is P&C dragging its feet?
It's consumer inertia. I mean, if I'm sick and someone needs to manage my health, I would wear that device. But if it's something on my washing machine, on my fridge, on my dishwasher, it's intrusive. I mean, today's world, with Alexa running in your home, you confuse how much that's listening into and not listening into. You talk about 5 more devices in your house, and it's just consumer inertia. So we got to with social media and awareness, it's the fundamental change of attitude that the P&C world needs to bring about. The health space and the life space, it's much, much, much easier, given the risk is your health and safety for your family.
So it's an interesting parallel you draw there, because you're right, people are concerned about the privacy for having a HomePod or an Alexa in their house. Yet despite that, there's a high adoption of that device in people's homes because they like the convenience of it. And perhaps this is where insurance needs to focus more. Is like people are concerned about the data privacy, but they're equally, you know, they want that service provision. And when it's purely a financial transaction, that they're not going to be persuaded. But if it provides a fuller service, they will be. Okay, I think we are slightly over time. So if there's a question or two, I'd be delighted to put those to the panel anywhere in the room.
I just wonder if the panel think there's a delta between what the regulators expect and what we as the insurance industry think they expect, and therefore we're more conservative we need to be. And then secondly, to the other point was around privacy. Are we putting our insurance heads' expectations around privacy on our consumers, and are consumers as worried about privacy as we actually think they are, given the examples of Alexa, Apple Watches, all the other intrusions that are going on across people's lives? I think actually consumers are adopting some of these devices more exponentially than you realise, and maybe we're holding ourselves back.
Ask again.
And again.
Who'd like to answer that question?
I mean, if I take the regulation one, I think what we're seeing more and more is the regulators actually want to work jointly with us. I mean, if I go from every degree from, there was lots of scaremongering around cloud. What are you doing with the cloud? Do we approve it? Every regulator in the world had a different view on it. But more and more what I'm seeing is through joint education, joint working, there is a greater adoption. So I think often, long as we start having the right conversations at the right time, there's more of an acceptance. There's a lot of myths and rumours about and scaremongering around technology, but I think the regulators are more accepting than we think. But it's about having those right conversations.
No, I'd agree, and I think if you remember why the regulator's there to help protect the customer, ultimately, and we have that same mindset, then you can have very common sense conversations about where you go forward. I think your question around data and are we, I don't know, you didn't use this word, but are we being paranoid about the use of data, and actually is there a mismatch between customers and business perceptions? I feel very much that we have a duty to look after customers' data with full responsibility and respect, and therefore we do need to be paranoid about making sure that it's used appropriately. So I know that wasn't quite the question that you asked, but I would much rather know that we're erring on the side of caution than find somewhere down the track that we've got ourselves into hot water. And I think we have had a very careless attitude to data in the past, which has been dangerous.
Okay, thank you. Any other questions at all from the room? Okay, should we take one more? Could we pass a microphone to this gentleman here? Thank you.
Thank you. Yes, I just wanted to ask, have you seen any significant innovations in reinsurance distribution? Do you know?
Maybe I'll put that to Pravina.
Yes, no, let me take that. I mean, if I think about the reinsurance business, it's very much a partner-led business. So it's partner-led, deep conversations, long history. So not dramatic changes, but then you must question, is there a need for change? But what we have seen is more value-add services. So what we tend to do is the partnership tends to be more of a help and support to build the relationships together. So in terms of, in our business, we come up with many kinds of solutions, whether it's underwriting solutions, telematic solutions, data analysis, to help the business we're reinsuring to make better business decisions. So I think that's probably what's changed. So instead of just doing standard long-term contracts, it's about what are the other things we can do to make sure the risk is adequately managed. Yeah.
Is there one final question before we go? We'll just give one more. Thank you.
Thank you. I was just going to ask, what other topics or like risks or innovations that you are thinking about today that you weren't thinking about 2 years ago? I feel like a lot of the topics we've touched on today have been topics that we've been thinking about for a long time.
Christina, do you want to answer
that? Yes, to be honest, many topics are around flexibility of use, customer experience, data ethics, telematics, Internet of Things, but they have been in the agenda for some time. I think it's our sense of urgency and our understanding of the speed that is happening in the market and how quickly customer needs and what the customers are asking for is changing. So I think it's much more the speed urgency than the actual topics, but that will be my take.
Okay, thank you very much. Thank you very much to the panel.